What's up, Mortgage Coach community? Today, I am interviewing Kerry Day. What's up, Kerry?
Hey, good to be here. Thanks for having me.
Yeah, no, it's good to have you. I've been wanting to interview you for quite some time, and we just haven't been able to get our schedules to mesh. But thank you for making time to bring your story and your strategies to the community.
For sure, excited about it. This community has been impactful for me, so glad to give back however I can.
Right on, dude. So I know one thing that just hit me with a bullseye in my last interview with Jay Kroll. I had always given him credit for calling the different scenarios strategies. I remember
Yeah, right.
I heard Jay do that probably 2 years ago or so, and then I made that a best practice and always gave credit to Jay. And in this last interview, he's like, he learned it from you. So,
funny. I didn't actually remember that. That's hilarious.
Yeah, no, he said, well, I learned that from Kerry. So,
awesome.
So by the way, do you happen to remember when you started calling, instead of calling it loan program or 30-year versus, when did you start doing strategies?
You and I have talked even just earlier about like how a lot of mortgage coaches telling a story, right? It's not just saying, here's the data, what do you want to do? It's telling the story. And so rather than saying like point strategy, no point strategy, rebate strategy, it's just saying strategy 1, strategy 2, strategy 3, strategy 4. And it's just getting them thinking not just about what's the rate and cost, but what is best? What's my best financial outcome given my personal goals? So man, I couldn't even tell you when I started doing that. I was thinking before this call, I can't even remember when I started using Mortgage Coach. It's been that long. I think it was probably 2010, something like that we started doing it. So yeah, that's just what we've always done.
Right on. Well, let's talk about Kerry Day. So tell us what market you're in, a little bit about your mortgage practice.
Yeah, so I'm in the greater Seattle area, just north in the Bothell, Woodinville, Mill Creek area. So about 30 minutes outside of Seattle. Been doing this since 2008. I actually got a job with Wells Fargo as a freshman in college as a teller, and kind of just worked my way up with them. Thought I was going the financial planning route with them, and then I got recruited into mortgage lending. My first day in the mortgage business was the day Lehman Brothers went under in 2008.
Wow.
And so it's funny, like these last few weeks, I'm like, oh, I feel right at home. It's kind of like the good old days, So yeah. So
and
that's my story.
Do you have a team? What kind of production do you do?
Yep. So I've got one loan officer assistant she's been with me 5 years now. Just hired my brother-in-law a little over a year ago. So we were just talking yesterday about how he closed his first loan right about April of 2019. So he serves as an LO on my team here for about a year, and that's it. We keep it lean and mean.
And what kind of production are you guys doing?
So 2019, we did 180 units for 85 million. Year to date, we're at about 20 million. We've got like probably 28 million locked loans in the pipe right now for about 60 units. So
wow.
Hopefully we'll get about 16, 17 million through for April, and then the rest will probably end up rolling in May. But
so you're killing it. I mean, business is good. Not without its struggles. Now, sure. I do want to talk. Where are you working from right now? Where are you at?
So right now I'm in my office. Our office is closed. I'm the only one in here. So I've got 4 children ages 8 and under at home. So I've been working at home as much as I can, but some of these days I just got to get in the office and get as much done as I can while I don't have the distraction of kids. So
right on. Yeah, no, 4 kids that's a lot. So, and you're obviously doing a lot of business. Let's talk about what's different. We are, right in the middle of this Corona times. It is middle of April, the 14th. What's different right now versus 3-4 weeks ago before quarantine came down? What are you doing differently right now?
It's interesting. I've always kept a pretty strict schedule. Like I was raised in the business to understand that flexibility is, yes, a benefit of this business, but also something that'll kill you, if you're not careful about your hours. So I'm still more or less getting up, going and punching out around, when I'm going home to have dinner with my family, whether I'm at home or not. The days I am working at home, it is a little bit more dynamic. I end up working a little bit later in the evenings in most cases, but I mean, outside of that, like, I feel like the dynamics are more market related than they are even just Corona or societally, if you will, created. And so we're trying to balance volume. We're trying to balance, obviously, product shift, you know, with everything that's been going on with jumbo and all that. And so just having a lot of proactive conversations, using as much of that as possible as we can to go back to our realtor partners and add value by educating them on what's happening. So yeah, it's not without its challenges, but there's a lot of opportunities.
No doubt. Well, I mean, you are a modern mortgage professional. Well, I've never done one of these interviews with you before. I've known you by reputation, and you are a modern mortgage professional. And I want to unpack some of that. Prior to this, I know Jay met with a lot of his clients in person. What percentage of your clients would you meet in person before, you know, the quarantine that we're in right now?
Yeah, so it's funny. I would say probably 75 to 80% of my clients, at least purchase clients, I would meet in person, and the rest I would try and get on a video if they wouldn't do a face-to-face. And that's one of the benefits I think that's going to come out of this is people are going to actually know what I'm talking about when they say, hey, we can't do face-to-face, and I say, hey, can you do a Zoom call? You know, they're going to know what I'm talking about. So we still try and get together as frequently as we can. I think people are going to be eager and willing to meet face-to-face even after all this stuff, because I think people are going to recognize the importance after having that kind of taken out of their life a little bit. So that's a pivotal part, the face-to-face contact.
So let's drill down on that. So face-to-face used to be 75% of your buyer consultations were face-to-face. Are now the 75% that were face-to-face? Are you doing Zoom with all of them?
Yeah, right now it's 100% Zoom. So Seattle has been on lockdown for quite a while now. So we're not doing anything in person. It's all via Zoom meetings at this point. So, and again, almost without exception, I don't even offer a phone call for those. I just say, hey, you know, here's your Zoom link. Here's your mortgage coach link. We'll talk soon, you know.
Got it. So those are assumptions. It sounds like, so my takeaway, because I know how many TCAs you've done, everybody's getting a TCA link, everybody's getting a Zoom link, and everybody's getting an application link.
Yeah, so the order that goes down, again, we're usually sending the application really early on. I don't want to spend my time with people that can't qualify. Then we'll send the Zoom link when we schedule the consultation. And then I'll usually hold on to the mortgage coach link until, you know, no more than a half hour before our meeting, because I don't want them getting the data and digesting it for themselves without the proper understanding of what it actually all means. So I'll typically send that anywhere from 10 to 30 minutes before our consultation and run through it with them, rather than saying, here's a bunch of numbers, go figure it out for yourselves. And then they come into the meeting with all sorts of presuppositions.
Got it. Now, what about a schedule a meeting link? I see more and more people in our community using Calendly or some software to make it more collaborative to schedule meetings. Are you doing that?
Yeah. We use that for our annual mortgage reviews. So we use Calendly for our annual mortgage reviews. Outside of that, I'm still doing the, you know, wait till it comes in and schedule them one by one, case by case. But all of our annual mortgage reviews, they have an option to schedule through Calendly before they get a phone call with us if they want to set that up.
Okay, so let's go through your full front end transaction, because you know you have this modern experience. What about BombBomb or any other video? Are you doing any types of video as part of your borrower experience?
Yeah, so we use BombBomb. We use that for all of our annual mortgage reviews. Again, we use it for periodic emails to our database. We'll use it for one-off follow-up. That's the beauty. If you've used BombBomb, you can just stick your phone out. I mean, it's simple, right? So we'll use it for a bunch of different potential purposes. We'll do video through Facebook. We've done some live video. We're going to be doing a home buyers class online with a realtor partner here in a couple of weeks. We just finished one a week ago. So yeah, we're trying to use it as much as we can. Frankly, I wish I could be using it more right now. It's just been a matter of bandwidth, you know.
Yeah, you're doing so much transactions.
Yeah, but we love it. I love video. Totally comfortable. I mean, people, I don't get it, and maybe it's just from the reps that we have over here. But I don't fully get when people say, "Hey, you know, I don't want to look at myself or whatever." Just do it. Yeah, everyone looks at you all the time anyway, whether you're on video or not. So
right.
So we love it.
What about, I am seeing a growing trend in our community where loan officers, when sending the digital link to fill out, they're putting a text video? Do you use text video at all?
We've done text videos kind of Brian Manning style a little bit.
So more with realtors, more realtors.
Yeah, more with realtors. I haven't done that a lot for people that that I haven't met. That's probably a good idea, honestly, is, you know, if you have a conversation with someone and they're supposed to pre-qual, to send the follow-up. I'll do the bomb videos, like if we have a meeting the next day, because often what I'll do, if I'm meeting face-to-face with somebody, I won't send them the Mortgage Coach app or the Mortgage Coach link. We'll review it on so I use an iPad for my Mortgage Coach presentation. That's the centerpiece of all of my face-to-face consultations. So I'll use an iPad, I'll air link it to my TV, we'll run through it on there, and then I'll tell them, hey, I'm gonna follow up with you and send you the data that we reviewed together. So in a lot of cases, I'll send them a bomb video the next day. Great meeting with you. Link is below with everything we reviewed. You know, here's whatever else we need. I'll call your realtor. And that's sort of what my follow-up piece will look like.
Got it. So a couple things I'd love to get from you, Kerry, if you're willing to share it. You know, I don't know if I'm gonna make it at the front of this or at the end, but I'd like to really walk through. Here is the email or text to send the app. Here's the email or text that you use to send Mortgage Coach. Do you mind giving me a couple samples so that we can really lay out your ultimate digital experience that's powering the way you do business right now? Would you mind sharing a couple prototype post this conversation?
Yep, for sure. You just want me to follow up with that?
Yeah, just follow up with that. So we got that. So you mentioned that the total cost is kind of the center of your on-site. Now we can't really model that right now, but I want you to describe that, and I'm going to pull up a TCA, I think you sent me a purchase and a refi. So we'll do one of each. Which one do you want to do first?
We can do the purchase first. So as you're pulling that up, I'll just kind of talk you through the way that my consultations go. So typically, obviously, there's just 4 key components. The first one is just building rapport, hearing a little bit more about plans, doing that whole forward conversation with my clients. From there, I'll actually
time out. I know what forward means. I want to make sure everybody knows.
Yeah.
Could you say what forward means?
Family, occupation, recreation, dreams. So that's part of the value of getting face-to-face, right? Like when I get on the phone or even on a Zoom call, people are more quick to want to get down to business. And the stickiness is created in the face-to-face. That's where the trust is built. And so the more that we can do that, the better. So we always lead with that, you know, as much rapport building dialogue as we can. It kind of transitions naturally into the home goals and the financial goals. From there, you know, we transition, and I'll actually pull up on my iPad the Rate Watch app and show them what the market's doing. So usually I'll take a 2-year span of, you know, mortgage-backed securities.
So time out. So are you doing it on your mobile device like this, or are you doing it on an iPad?
I'm doing it on an iPad that is linked to my television screen. So I'll pull that up, pull it up. It'll pull up on the screen. So, you know, we're not all looking at my little device. It's on the big screen. And if I'm doing a phone call or a Zoom thing, I'll actually send them a picture of the 2-year mortgage-backed securities chart inside of that email. So I use that to show them high level what's going on with mortgage rates so that they can understand that this isn't static. I don't determine this. Here's where we are in context. It allows me to talk outside of just again, what's your rate and cost, more high level, and to establish myself as an expert in the markets.
Okay, so how many minutes do you think you're spending on, let's just call it, I'm an expert on the market?
So on the mortgage-backed securities thing, you know, that piece is a couple of minutes. You know, here's where we are, here's where we've been. Oftentimes I'll speak anecdotally, you know, about my own experience. You know, my wife and I bought our first home in 2008. So our rate was 6+%, right? So I'll talk about that all the time and say, hey, you're getting a rate right now for almost half of what my wife and I paid for this just over a decade ago, right? And I'll also use that to talk about, similarly, buying a home is a long-term investment. We bought this home in 2008. The market, at one time, our neighbor literally sold for half of what we bought for it. And guess what? We eventually sold that home and still made a profit. So those are the sort of conversations that we'll have around the Rate Watch app that allows me to just give some context to people to say whether rates are a little bit higher than this or lower than this when you go to buy, you're in an amazing position right now.
So guys, make sure you're pulling up the app if you're following Kerry's process and you're spending 2 minutes, that the takeaway will be, this guy has his pulse on the market. He's given contrast, and he's using the Rate Watch app to give context and authority. Like, I have your back covered. I know what's happening before what's happening on the news happens. All right.
Right.
And then when does the TCA come into
That's
play?
the transition. So I always say, let's start high level. Let's look at the market. So let's answer any of your questions about what's going on in the economy or with real estate or mortgages. And then we'll transition into the data. And so in this case, this is typically what I'll do. So what you're looking at here, Dave, is this is a client I locked yesterday. It was a condo purchase in Seattle. So in this case, she's already in contract, right? So if she wasn't in contract, what we might have is, you know, in the case of her, she's at 335. So maybe we would have looked at 300, maybe shown 2 strategies at 350, one with a point, one with no points, and one at 400. You know, if this was a initial conversation,
purchase power or purchase
Exactly.
options, down payment options, whatever is tailored to their TBD. They don't have anything escrow. What options?
Right.
Okay.
Always trying to make sure, though, that whether I would recommend it or not, I'm showing one lower rate, higher cost option, just so that they know, hey, it's not that Kerry has higher rates than everybody else. It's that, you know, there are rate options out there, and he will help me determine the break evens, the interest over this period, the pros and cons, given my unique situation. Okay.
Got it.
So then in this scenario, again, basically yesterday, I went in there when we got our contract Sunday night, went in there yesterday morning, updated all this data to the specific lock situations for her condo pricing. And then I obviously broke down a scenario where she was paying, I think it was a point plus for something like 3 1/4. And then on the higher end, I think it was a 3 5/8. Maybe she was paying an 1/8 of a point, right? And so I just walked her through, like, here's the upfront cost for this. Here's what it means for your interest rate. Here's the trade-off. It's, you know, you can part with more cash up front to save more cash over time or not. And so we'll usually start high level. We'll dig into the breakdown of the payment. And by the time we're done, again, she actually had changed her mind. Her initial gut was, I want 3 1/4. And I said, that's great. That is an awesome rate. I'm sure you would never regret having that rate. Let's talk through why 3 1/4 is what it is, what it's costing to get that, and then compare it with the options. And then in this case, we looked at 3 5/8 versus 3 1/2, and she could see that there was a smaller point spread to get from 3 5/8 to 3 1/2. And then when you went from 3 1/2 to 3 3/8, there was a larger point spread that basically doubled the break-even period, right? And so that's what this tool did for us.
So this is really a homes and escrow, and we're doing a points analysis. Like, does it, you know, we're analyzing different rates. Important takeaway for everybody, guys. It's always important to give transparency, but in today's market, clarity and transparency have more value than ever. I just, you know, pulled that as a couple takeaways from my interview with Dr. JJ Peterson with StoryBrand. And, you know, so just the fact that you can show these options, that's options. You could show it in a greater level of transparency. Most loan officers only show cash to close. When you're showing the cost over 60 months and you're showing the options over long periods of time, that is more clarity, that is more transparency, and that is going to create a better conversion, and it's going to save you time. So that's one thing I wanted to cover. Do you think Mortgage Coach takes more time, or does it save you time when you really net out the whole experience?
Oh, it saves a ton of time. So I think in this market in particular, when things are moving so quickly, to be able to go in the back end and update pricing without having to take the time to explain, hey, here's why this shifted by $2 or $3 or $4 or $500. Like, every 8% change in rate for a borrower or in cost for a borrower is monumental if it's static and they're looking at this loan estimate versus that loan estimate. And you could spend so much time explaining this loan estimate versus that loan estimate that the market in the meantime is shifting even worse, versus get in there, update it. You're making your follow-up call and you're just telling them, hey, I've updated this to current market pricing, right? That's in this market for me, that is one of the most valuable things about Mortgage Coach, is that it gives me complete control to make sure that the information we're looking at is up to date, not static. We're not spending all this time looking at what was, we're looking at what's right in front of us.
Hey, I'm curious, before we do your refi analysis and we really talk about how you're serving refi families, I know you guys are big with Ninja Selling and Larry Kendall, and I was just wondering, his dual market concept. Are you seeing that in your market where, kind of lower end is selling at one rate, jumbos are at another? So like the dual market is really starting to become obvious and clear?
Yeah, well, it's been interesting. I mean, up until this point, everything's been selling like hotcakes in Seattle, at least year to date. Last year, we took a bit of a step back from what had been 10, 15, 20% year over year appreciation. So no, over most recent history, everything's been really, really hot. And even now, that's a bit of what we're seeing, is that jumbo is still in high demand. And you're probably seeing this in lots of markets that you look at, Dave. Right now, yes, some buyers have backed out because they're fearful, but a lot of sellers have also hung on to their inventory, right? And so that's just creating this continued low inventory environment that is helping to keep things stable. So I feel really, I don't know how you feel, I feel really great about the
well,
housing.
It's market, I think it's market to market where you're seeing that bear its head. So let's get into, we've only got a few minutes left. Let's go through a refi analysis. And I have been making the claim that Mortgage Coach is making refis easier, and it's making them more valuable to the consumer. And I mean, I think that's true in every market, but I think it's never been more true in today's market. So one, do you agree with that? And two, walk us through your refi analysis with Mortgage Coach.
Yeah, I think it, again, the ability to be able to go in and change in live time is huge. So if you scroll down on this one, Dave, what you're going to see, for example, is I was talking to this guy. Sometimes you get on the phone with someone and you realize that, okay, what I put together is not quite exactly what they want. And this tool allows me, without having to go back and say, you know what, I'm going to PDF another loan estimate and send it to you, and we'll schedule another time. Like, this tool allows me to shift as I go. And so it was apparent really quickly in this conversation that he wanted a low cost refinance situation that added as little to his loan amount as possible and cost him as little as possible, just based on his time horizon. And so we landed on this more strategy 4, which he was getting a rebate towards closing. We started to build that out. I think I even added that rate while I was on with him, or I went at least added 3.5. So he had 2 scenarios that are paying a rebate. And then in strategy 4, you'll see he's actually bringing some cash to close versus the others he wasn't. And that's because he said, I don't want my loan amount to increase if I'm going to sell. I want to net as much as I can. So we said, great, you pay $2,500 a month roughly for your mortgage payment. Let's have you come to close with roughly $2,500. So the ability, number 1, to be able to change as we go. And then number 2, to be able to drive this thing, to be able to click, pull up screens, highlight. I mean, we talked to a lot of Microsoft, Facebook, Google employees in the Seattle area, and you would always think I'm doing like black magic when I start pulling up screens and highlighting. It's pretty funny.
We hear that the Facebook and Amazon community loves Mortgage Coach. We get testimonials all the time that, and that is something, a little bit of a brag, but we believe that mortgage professionals, we're not competing with other mortgage professionals. We're competing with Facebook, Amazon, Uber, Netflix. I mean, that's the kind of experience as lenders we need to deliver. And we work really hard to make sure that, the design of the TCA, the way it moves, the way video integrates seamlessly, the way the live experience works. I mean, it's an Amazon quality technology experience. And we hear that all the time from Amazon developers. So it's good to hear that you reaffirm that. Anything else you want to call out on this? And by the way, what do you call the total cost analysis to a borrower? Do you call it a total cost analysis, or do you have a different term? What do you call it?
I'll usually call it a comprehensive mortgage analysis, or sometimes I'll use total cost analysis. Basically, I just try and separate it from a fee worksheet, so to speak, by letting them know that it's an online analysis tool that will lay out for them their different mortgage options, right? And
Awesome.
that's the key, you know. And I'll say all the time, like, you can have any rate that you want. It's just a matter of what's it going to cost you, right? And what will the benefit be? And so that's what we care about. It's not what rate you're going to get, but what's the overall benefit and how does it fit your particular financial scenario.
Do you ever take like the monthly savings and say like, hey, there's 265 and what if we prepaid it? I don't have.
So the reinvestment strategy, I used that on the call with this guy yesterday.
So like this one, this is a debt consol that Josh Metal did. And he said, hey, here's your current loan. Here's your 30-year. What if we, took that 460 in savings and prepaid, brought it down to 21 years? Or what if we consolidated all your debt and you kept making the same payment? You could pay it off in 17 years. So you do that move. That is something you're familiar with.
Yes. So this guy yesterday, again, as soon as he started to express concern about, well, hey, I want my loan amount to be as low as possible because I may sell in the next 2, 3, 4 years. I said, great. Let's take that money that you're saving, that $200+, and show you what would happen if you apply that towards your principal each month, right? So there you go. Again, and to be able to do that in live time, and he's like, oh, okay, well even there's possibly 11, 12 grand if we end up being here more 4 or 5 years, then it's a no-brainer at that point.
So Kerry, I don't know if you noticed it when you logged into Mortgage Coach this morning, but we launched gamification, guys. So do want to just make sure everybody in the community is aware of this. When you log in, it will show you where you are. But if you click on settings, we've got this new dashboard that will tell you how many TCAs you've created. If you click on this, it'll tell you where you're at, what belt you're on. Part of our motivation was not only to make being a mortgage coach more fun and more competitive, but making onboarding, learning it. So we've got some onboarding badges. If you're new to the mortgage coach community, we put that so you have a place to go. And we just looked for different ways, partner reports, our open house analysis, whatever it is, there's now a trophy case for you to see where you're at as a mortgage coach.
That's fun.
You are a grandmaster, my friend.
All right, I'll take it.
Yeah. So any last words of wisdom as we wrap this up? You've listened to these interviews. Anything you want to say to the mortgage coach community and wrap up?
Yeah, I think it's a unique moment in time that we find ourselves in. Like, this is why we've built these relationships for years and years. Whether you've been doing annual mortgage reviews or HomeBot or client events or whatever, like, this is it. Lean in. There is opportunity to add value, for lack of a better comparison. Like, I feel like we're shooting fish in a barrel right now. So use Mortgage Coach to help make those conversations more compelling, to present your savings both on a monthly basis, but also a long-term basis, and to prevent yourself from having to resell the client on what the benefit is time and time again, So that's what I would say. Like, this is a fun time. It's a crazy time, but I'm super grateful for our industry, given where a lot of folks are. Man, we are blessed right now, and I'm glad to be in the mortgage business and glad to have this as a tool.
Yeah, and guys, we do have a responsibility to help as many families as we can get fiscal stimulus through a refi, and give them transparency and clarity around their mortgage decisions. So hopefully you got value from this. Kerry, you are an awesome leader in the mortgage coach community. Thank you, brother, for making time for this. Guys, this is a wrap. If you got value, please like us below, share this with your mortgage friends, and have an awesome day, everybody. Take care.